Ethereum, the most developed project in entire cryptocurrency space, and the #2 crypto in terms of market cap value. To understand how it secured that place, you need to dive inside its epic history, and that is exactly what we will do today. And I can promise you one thing, even if you are a complete beginner, you will be able to understand everything, because every video on Bitcoin Academy is 100% beginner friendly. We will start by diving deep, even before it officially launched. In late 2013, a young programmer named Vitalik Buterin became frustrated with Bitcoin's limitations. While Bitcoin was a revolutionary system for peer-to-peer digital money, it wasn't designed to be flexible or programmable. Vitalik envisioned something different, a blockchain that could run code, allowing developers to build decentralized applications directly onto the network. These applications wouldn't rely on middlemen, could be used by anyone in the world, and would work automatically through something called smart contracts, small programs that execute on their own when certain conditions are met. That vision became the foundation of Ethereum. To bring it to life, Vitalik wrote the original Ethereum white paper in late 2013, which outlined how such a programmable blockchain could work. His idea quickly caught the attention of others in the early crypto space, and soon he was joined by several co-founders who helped shape the project's future. Among them were Mihai Alizi, Anthony D'Iorio, Charles Hoskinson, Joseph Lubin, Gavin Wood, and Amir Chetrit, each bringing different strengths from software development to business strategy. In April 2014, Gavin Wood published the Ethereum Yellow Paper, a more technical document that described the protocol in detail and laid out how the network would actually function under the hood. By that point, Ethereum was more than just an idea. It was becoming a real project. What made Ethereum stand out wasn't just its technology, but its bold ambition to become a kind of world computer where anyone could build tools, services, or organizations that no single company or government could shut down. And that idea might sound similar to something. And if you think about it, it sounds much close to idea of internet back in the day. Same as Ethereum, internet had revolutionary idea of connecting and upgrading the way world operates. And same as people today don't understand crypto. Back in the day, they thought same about internet, calling it a scam. So ask yourself one simple question. Which person do you want to be? One that closes eyes on something that might change the world, or one that recognizes that and takes advantage of being early? All right, getting back to topic. And this concept was still before the Ethereum blockchain had even launched. This early period, from late 2013 through mid-2014, was about defining the mission, assembling a team, and preparing for the next big step, raising the funds to build it. That step would come soon through something called a crowd sale, but we'll get to that in the next topic. For now, what matters is understanding the origin. Ethereum began with a teenager's frustration, a bold idea for programmable money, and a group of believers who turned that idea into a movement that would reshape the entire crypto space. Whether you're a complete beginner or already curious about blockchain, knowing where Ethereum came from gives you the perfect starting point for understanding where it's going next. And speaking about next, we can move to topic #2. With the Ethereum white paper published and a team of co-founders assembled, the next step was to make the project real, and that meant funding it. In 2014, the Ethereum team launched something called an initial coin offering, or ICO in short, which was still a brand new concept at the time. Instead of raising money from banks or investors, they opened the door to the public. Anyone could send Bitcoin to the Ethereum Foundation and receive future ETH tokens in return. This was long before Ethereum had even launched, so buyers were supporting nothing more than a vision and a promise. Still, it worked. Over the course of several weeks in mid-2014, the ICO raised over $18 million worth of Bitcoin, a massive success by the standards of that time, and one of the first signs that Ethereum had serious potential. The Ethereum Foundation, a nonprofit based in Switzerland, was created to manage these funds and guide the development of the platform. Its goal was simple: support the creation of an open, decentralized network that anyone could build on, with no corporate ownership or control. After nearly a year of development and testing, that goal took its first real step forward on July 30th, 2015, with the launch of Ethereum's Genesis block. This event marked the official birth of the Ethereum blockchain. The first release was known as Frontier, an early bare-bones version of the network meant mainly for developers and technical users. It wasn't flashy or polished, but it was live, and it worked. For the first time ever, people could deploy smart contracts on a public blockchain. transfer ETH between wallets, and interact with decentralized applications, all without needing permission from any centralized company or authority. It was a quiet but historic moment, the beginning of what would later grow into the foundation of Web3. This early launch proved that Ethereum's technology wasn't just theoretical. It could function in the real world. And while there were still many challenges ahead, including stability issues and limited functionality, the core idea had finally become reality. What's especially important to understand here is how different this approach was compared to traditional tech companies. Ethereum didn't start with a product and then look for users. It started with an idea, programmable money, and let the community shape what it would become. From the very beginning, Ethereum's story was about giving people tools and letting them build. That spirit of experimentation, openness, and global participation would go on to define the entire Ethereum ecosystem. And as we'll see in the next topic, once the network was live, it didn't take long for the first wave of real innovation to begin, including early upgrades, new apps, and the start of Ethereum's massive growth phase. And that early growth is what brings us to topic number 3. After Ethereum's launch in July 2015, the network entered a phase of experimentation and learning. The very first version, called Frontier, was just the beginning, a kind of test bed for developers to explore what was possible with smart contracts and decentralized applications, or dApps in short. As the community grew and feedback came in, the Ethereum team prepared the next big step, the Homestead upgrade. Released in March 2016, Homestead was Ethereum's first major update, bringing increased stability, bug fixes, and improved tools for building on the network. It marked Ethereum's transition from a rough prototype into something more solid and usable. With this upgrade, confidence started to build, and developers from around the world began to take Ethereum seriously. That same year, we saw the birth of some of the first real dApps, decentralized applications that lived entirely on the blockchain. These included early and ambitious projects like Augur, a prediction market that let people bet on future events using ETH, MakerDAO, which laid the groundwork for decentralized stablecoins and borrowing systems, and Golem, a platform that aimed to create a global decentralized marketplace for computing power. Each of these projects showed that Ethereum wasn't just theory, it was a platform for innovation. Anyone from anywhere in the world could now create financial tools, games, marketplaces, or organizations that didn't rely on banks, governments, or tech giants to operate. That was a revolutionary idea. And even in these early days, it was already starting to catch on. Developers were attracted by Ethereum's flexibility. Users were curious about the new kinds of apps being built, and the broader crypto community began to recognize Ethereum as more than just a Bitcoin alternative. It had its own identity, its own purpose, and a growing list of real-world use cases. But as with any new technology, growth came with new challenges. And as we'll soon see in the next topic, one project in particular would push Ethereum to its limits, spark a massive debate, and change the course of its history forever. But for now, just know this. The Homestead upgrade and the first wave of dApps proved that Ethereum was more than just hype. It was working, it was growing, and it was starting to deliver on its bold promises. Then in 2016, some major things occurred, and we will explore them now within topic number 4. In 2016, Ethereum faced its biggest test yet, a crisis that not only shook the network, but also forced its community to make a decision that would define Ethereum's identity forever. It all started with something called the DAO, short for Decentralized Autonomous Organization. Think of the DAO as a kind of venture fund, but without a company, a CEO, or a boardroom. Instead, it was fully run by smart contracts on Ethereum. The idea was simple but powerful. People could send in ETH, and those funds would be used to invest in projects, with the community voting on where the money should go. It was one of the first large-scale use cases for Ethereum, and it captured massive attention. In just a few weeks, the DAO raised over $150 million worth of ETH, an unheard of amount at the time. But then something went wrong. Just a few weeks after the fundraising ended, a hacker found a vulnerability in the DAO's code, not in Ethereum itself, but in how the DAO was written. Using that bug, the attacker began draining funds into a child DAO under their control. By the time the attack was paused, around $60 million worth of ETH had been moved. The Ethereum community was stunned. People began debating, should the blockchain be altered to fix the mistake, or should it stay unchanged to preserve the principle that code is law? After intense discussion, the community chose to take action. A majority supported a hard fork, a change in the Ethereum code that would reverse the hack and return the stolen funds to their original owners. This decision led to the split of Ethereum into two separate blockchains. The forked version, which reversed the hack, became what we now know as Ethereum. The original chain, which continued without modification, became Ethereum Classic, supported by those who believed no blockchain history should ever be altered, no matter the reason. This moment was about much more than fixing a bug. It was about trust, governance, and what it means for a blockchain to be truly decentralized. On one hand, the fork showed Ethereum's human side, a willingness to protect its users and respond to emergencies. On the other hand, it opened the door to criticism that Ethereum could be changed if enough people agreed, which some saw as a weakness. But despite the controversy, the hard fork worked. The Ethereum community moved forward, development continued, and confidence returned. In fact, many people see this episode as a sign of Ethereum's strength, the fact that the ecosystem could survive a massive hack, make a tough call, and keep building. And that resilience would become more important than ever as Ethereum faced new challenges ahead. But for now, what you need to understand is this. The DAO showed both the power and the risk of smart contracts. It proved that real money and real decisions could happen on Ethereum, but also that security and governance were just as important as innovation. And in the end, it made Ethereum stronger, more experienced, and more prepared for the road ahead. And that road is exactly what we will explore in our next topic, which is number 5. After surviving the DAO crisis, Ethereum entered a new phase between 2017 and 2019, a period full of explosive growth, but also major growing pains. On one hand, the ecosystem was thriving. This was the time when thousands of new tokens were created, thanks to something called the ERC20 standard, a simple rule set on Ethereum that let anyone launch their own token on top of the Ethereum network. This led to the famous ICO boom in 2017, where startups raised billions of dollars by selling their new tokens to the public, often with nothing more than a white paper and a promise. Ethereum was the engine behind it all, powering this wave of blockchain fundraising that was unlike anything the tech world had ever seen. But while all of this attention was great for adoption, it also exposed Ethereum's weaknesses. One major issue was scalability. With so many people using the network at once, Ethereum began to slow down. In fact, one single application, a collectible game called CryptoKitties, became so popular in late 2017 that it actually clogged the entire network, causing delays and skyrocketing fees. It was a wake-up call. Everyone knew Ethereum had potential, but now it was clear that the current version couldn't handle mainstream traffic. To address this, Ethereum launched a set of planned upgrades known as the Metropolis phase. The first upgrade, called Byzantium, went live in October 2017, bringing security improvements and new features for developers. The second, Constantinople, arrived in February 2019, with more changes aimed at efficiency and future-proofing. These upgrades were important, but they didn't fully solve the core problem. Ethereum was still limited to about 15 transactions per second. For comparison, Visa handles thousands per second. So, while Ethereum was leading in terms of innovation and real-world usage, it was also showing its limits. At the same time, security was becoming a bigger concern. As more money flowed into the Ethereum ecosystem, smart contracts became a bigger target for hackers. Bugs in code led to lost funds, and new kinds of attacks, like flash loan exploits, began to appear. It became clear that writing secure smart contracts wasn't easy, and even small mistakes could cost millions. Still, Ethereum kept pushing forward. The community was learning fast, developers were becoming more experienced, and tools for auditing and testing were improving. What made this period so important was that it taught everyone, from builders to users, that blockchains aren't just about hype. They're infrastructure, and infrastructure needs to scale, secure, and evolve. Ethereum wasn't perfect, but it was the only smart contract platform being tested at this level, in the real world, with real money. And while it didn't have all the answers yet, the lessons learned during these years laid the groundwork for Ethereum's next phase, one that would redefine finance itself. And that's exactly what we'll explore in the next topic, the rise of DeFi, and how Ethereum became the backbone of a new financial system built entirely on code. By the time we reached 2019, Ethereum had survived a major hack, powered a global wave of fundraising, and pushed through critical upgrades. But what came next would take things to a whole new level. This was the era of DeFi, or decentralized finance, a movement that would turn Ethereum from a developer playground into a serious financial powerhouse. Imagine taking all the services you expect from a bank, lending, borrowing, trading, even earning interest, and recreating them entirely with code. No middlemen, no bank branches, just users and smart contracts. That's exactly what happened during this time. Platforms like Compound and Aave allowed people to lend and borrow crypto assets directly through automated smart contracts. Decentralized exchanges like Uniswap let users swap tokens instantly without giving up control to a third party. This also gave birth to yield farming, a way for users to earn returns by putting their crypto to work in these decentralized systems. Suddenly, Ethereum wasn't just a tool for developers anymore. It was becoming a financial system in its own right, open to anyone with an internet connection. Billions of dollars began flowing into these DeFi protocols, and the term TVL, or total value locked, became the new measure of success. This wasn't just a trend, it was a full-blown revolution. And what made it especially powerful was how transparent and permissionless it all was. You didn't need a credit score, a passport, or approval from a bank. You just needed a crypto wallet and some ETH to get started. But with great power came new risks. The rise of DeFi also brought attention to security flaws in smart contracts. Flash loan attacks, where hackers used clever tricks to manipulate protocols and drain funds, started making headlines. Some projects lost millions in minutes because of bugs or poorly written code. These incidents reminded everyone that while DeFi was powerful, it was still very experimental, and security needed to evolve as quickly as the innovation. But overall, this period solidified Ethereum's position as the most important blockchain in the crypto world. While Bitcoin remained the king of digital gold, Ethereum had become the engine of crypto's new economy. Developers were flocking to it, users were relying on it, investors were paying attention, and most importantly, it was proving that the dream of decentralized finance wasn't just theoretical. It was working, right now, in the real world. This wasn't just about Ethereum anymore. It was about changing the way finance itself operates, removing gatekeepers, building new tools, and creating a system where anyone, anywhere, could participate. And this explosive growth would soon lead to even more attention, especially with the rise of NFTs and the long-awaited transition to Ethereum 2.0. But before we get there, it's important to understand that DeFi wasn't just a feature of Ethereum. It was a turning point. It showed the world that blockchains weren't just about tokens or speculation. They were platforms that could run real economies. And Ethereum, more than any other network, was proving itself as the foundation for that future. It was time for major things. And those major things bring us to topic number 7. By the time Ethereum reached the end of 2020, it was clear that something big had to change. The DeFi boom proved how powerful Ethereum could be, but it also exposed its biggest weakness. The network simply couldn't scale fast enough. Fees were rising, congestion was constant, and Ethereum's old infrastructure, built on proof of work just like Bitcoin, was starting to show its age. That's why developers had already been working behind the scenes on something massive, Ethereum 2.0. This wasn't just a small upgrade. It was a full transformation of how the entire network worked. The first major step came in December 2020, with the launch of the Beacon chain. This new chain didn't replace Ethereum immediately. Instead, it ran in parallel and introduced a brand new system called Proof of Stake. Unlike Proof of Work, which relies on energy-hungry mining, Proof of Stake allows people to secure the network by locking up ETH and acting as validators. It's cleaner, more energy efficient, and designed to scale better. But Ethereum 2.0 wasn't just about saving electricity. It was about laying the groundwork for the future. Then in August 2021, Ethereum introduced another major upgrade called EIP 1559. This changed how transaction fees worked by introducing something called base fee burning. In simple terms, part of the fees that users pay would now be permanently destroyed or burned, which started to reduce the total supply of ETH over time. That's a big deal because it made ETH potentially deflationary, meaning it could become more scarce and valuable the more it's used. Around this same time, Ethereum was exploding in popularity thanks to NFTs. Unique digital items like CryptoPunks and Bored Apes started grabbing attention, and most of them were built right on Ethereum. Artists, creators, and collectors suddenly had a brand new platform for digital ownership, and Ethereum was the center of it all. These moments weren't isolated. They were signs that Ethereum was evolving far beyond its original vision. It was no longer just a platform for developers or a home for DeFi. It had become a cultural and financial hub, but the most important changes were still ahead. Ethereum 2.0 was never meant to happen all at once. It was being rolled out in phases, each one carefully designed to upgrade different parts of the network. And while the beacon chain and fee burning were major achievements, the biggest milestone, the actual merge of Ethereum's two chains into one unified proof-of-stake system, was still on the horizon. But even before that happened, it was clear that Ethereum was stepping into its next era. The foundation had been laid, the code was evolving, and the community was preparing for what many believed would be the most important upgrade in crypto history. So while Ethereum still had its challenges, from gas fees to competition from other blockchains, it was proving one thing above all: it could adapt, it could grow, and it could lead. And that leadership would soon be tested as Ethereum prepared for the event known simply as the merge, the moment when Ethereum would finally leave proof of work behind for good. And right now in topic number 8, we will explain that merge period. And now we've arrived at one of the biggest events in Ethereum's entire history, the merge. After years of development, testing, and anticipation, Ethereum officially transitioned from proof of work to proof of stake on September 15th, 2022. This wasn't just a software update. It was a complete shift in how Ethereum operated under the hood. Before the merge, Ethereum still relied on mining, just like Bitcoin, where computers competed to solve puzzles and validate transactions. But mining is energy intensive and not sustainable long term. So, Ethereum replaced that system with something called proof of stake, where people stake their ETH to help secure the network and earn rewards for doing so. What's amazing is that this shift happened while Ethereum was still running. There was no pause, no restart, and nothing shut down. It all happened live, through a carefully coordinated upgrade that joined the original Ethereum mainnet with the new beacon chain running in parallel since 2020. The result? Ethereum immediately cut its energy usage by more than 99.9%. That's not a small improvement. It's like replacing an entire power plant with a light bulb. The merge proved that massive systems can evolve without breaking, and that a global, decentralized network can make bold moves if the community believes in it. But the merge wasn't just about saving electricity. It also laid the final piece of groundwork for Ethereum's future, a future built on scalability, sustainability, and economic efficiency. By moving to proof of stake, Ethereum opened the door to faster upgrades, stronger security models, and better integration with Layer 2 solutions that help the network handle more traffic. And remember the fee-burning upgrade we mentioned earlier? Combined with staking, this change made Ethereum's economy much healthier. Some even argue that ETH could eventually become a fully deflationary asset. But for the average user, here's what truly matters. Ethereum now runs cleaner, more efficiently, and is more adaptable than ever before. And it did all of this without ever going offline. That's the power of open source development and global coordination. The merge showed that Ethereum wasn't just built to survive. It was built to grow, adapt, and lead. And as we move forward into 2023 and beyond, this upgrade will serve as the backbone for everything else coming next, including scaling solutions, faster transactions, and unlocking the full potential of Web3. So if you're just getting into crypto and wondering why Ethereum matters, this is why. Because Ethereum just pulled off one of the most complex upgrades in tech history, while never losing sight of its core mission, to build an open, decentralized future that anyone can be part of. But one thing was considered troublesome with this upgrade, and that is the fact that in order to run a node on proof-of-stake consensus mechanism, you need to stake at least 32 ETH, which by current prices far exceeds 50,000 US dollars. And that amount is not small for general public and average person. And that raised a question of decentralization. The core idea of crypto is to be open for everyone, but we must agree that amount needed to run a node far exceeds the budget of average user. But very short after the merge, staking pools were founded. The idea was to enable anyone to join a pool with smaller amount of ETH and make total sum of all pool exceed the 32 requested amount. This concept gave everyone a chance to participate, regardless of the amount they are able to stake. Merge was done, but upgrades never stopped. In fact, they intensified, which we will now discuss in topic number 9. And that brings us to the phase known as post-merge upgrades, which began in 2023 and continued into 2024. While the merge was a major milestone, it didn't immediately make Ethereum faster or cheaper to use. That's where the next wave of changes came in. The first big upgrade was called Shanghai, or sometimes Chapella, and it launched in April 2023. This upgrade finally allowed validators, the people staking their ETH to help run the network, to withdraw their staked ETH and rewards. Up until that point, anyone who staked ETH had to keep it locked. So this upgrade was a major moment of trust and maturity, showing that Ethereum's proof-of-stake model was now complete. But the real buzz in 2024 came from a different kind of upgrade called Danksharding, also known as EIP 4844. That might sound super technical, but here's what it means in simple terms. Danksharding is a stepping stone to something bigger called full Danksharding, which is Ethereum's long-term scaling strategy. It helps Layer 2 solutions, like Optimism, Arbitrum, and zk-Sync, become way more efficient by giving them cheaper space to store data on Ethereum. This is huge because instead of trying to cram everything into one lane, Ethereum is now building highways for Layer 2s to operate on top. These rollups process transactions off-chain, but settle them on Ethereum, combining speed with security. And with Danksharding Live, rollups can now offer lower fees and faster speeds to users, bringing Ethereum one step closer to being ready for mainstream adoption. These improvements might not be as dramatic as the merge, but they're critical. If Ethereum wants to support millions of users and global scale applications, it has to be affordable and fast. And instead of trying to do everything on its own, Ethereum is now evolving into what many call a modular blockchain, meaning it handles the core security and data availability, while rollups and other tools handle the user-facing activity. This structure allows Ethereum to remain decentralized and secure, while still offering performance that can compete with faster chains. So if you've ever tried to use Ethereum and thought, why are the fees so high? Or why is this so slow? The upgrades in 2023 and 2024 were designed to directly solve those problems, not by patching over them, but by rebuilding the system in a smarter way. These changes also reflect a broader philosophy shift. Ethereum isn't trying to be one giant machine anymore. It's becoming a flexible platform that supports an ecosystem of tools, apps, and extensions, all while keeping the base layer neutral, secure, and minimal. And as we look ahead to the next and final phase of Ethereum's long-term roadmap, full Danksharding and statelessness, these post-merge upgrades represent a critical bridge between the Ethereum of the past and the Ethereum of the future, a future where anyone, anywhere, can use blockchain tech without needing to understand the tech at all, just like using the internet today. But before we get there, let's take a look at where Ethereum stands right now in 2025 and what's next on its roadmap, because the story isn't over. It's just getting started. All right, time for present and also our final topic for today. What began as a bold idea more than a decade ago has evolved into the backbone of the decentralized internet. Ethereum today is no longer just the smart contract platform. It's the foundation for thousands of applications, rollups, and protocols that handle everything from finance to identity to gaming. Thanks to upgrades like Dencun and Danksharding, Ethereum has embraced a modular architecture where the base layer focuses on security and data availability, while faster Layer 2 solutions like Optimism, Arbitrum, and zk-Sync handle most of the actual user activity. This shift has made transactions cheaper and faster, helping Ethereum scale without compromising decentralization. More importantly, it's paved the way for what comes next: full Danksharding and stateless clients, major milestones that will allow Ethereum to handle massive global usage without bloating the network. Meanwhile, Ethereum continues to dominate in real-world use. Billions are locked in decentralized finance, DeFi protocols. Real-world assets like real estate and bonds are being tokenized on-chain, and NFTs still power everything from digital art to in-game collectibles. Institutional adoption has also grown, not always in headlines, but in infrastructure, with financial giants and governments exploring Ethereum as the settlement layer of the future. At the same time, Ethereum has become more interconnected. Bridges and cross-chain protocols now allow assets to move freely between Ethereum and ecosystems like Solana or Cosmos, making Ethereum a central hub in the broader Web3 world. Of course, challenges remain. User experience, UX, still needs to improve for mainstream adoption. Wallets, onboarding, and recovery are better, but not seamless yet. And debates about governance, upgrade paths, and funding models are becoming more complex as Ethereum grows. But despite these hurdles, Ethereum has proved its staying power. It's no longer a speculative experiment. It's infrastructure. It's the rails for decentralized apps, money, and digital ownership. In 2025, Ethereum isn't just a platform. It's a movement that's still growing, still evolving, and still guided by the original mission: to build an open, permissionless future that anyone in the world can access. And the best part? The most important chapters of Ethereum's story may still be ahead. Now, you can truly say that you understand Ethereum, but don't stop here. I encourage you to watch one of these 2 videos you see on the screen right now. Crypto was never bigger, and educating yourself about it was never more important. I truly hope you found these information helpful. If yes, make sure to like, subscribe, and share this video with your friends. As always, best of luck, and see you in my next video.